Hello traders, the title of the video is ABCDE Corrective Wave Price Structure Forecast. Alright, so I want you to look at this chart and tell me or put in a comment section whether you see the ABCD chart pattern here. Alright, look at the chart. Okay, can you see any ABCDE corrective wave on this chart? Alright, so in 1 minute try to find out whether look at it whether you can see ABCDE corrective wave. Alright, as you are doing that, the ABCDE corrective wave or corrective wave pattern, it is a very distinctive wave pattern. It is in fact a very powerful Elliott wave pattern because it is a triangle. So within that triangle, we usually see, because I recorded many videos already about ABCDE, so you may use tool search playlists about ABCDE by 24 Elliott Waves YouTube channel, or you may go to www.24elliottwave.com and click on ABCDE corrective wave. Alright, it's a very distinctive corrective wave because it's powerful. It's a triangle, and as I told you 100 times, a triangle is telling us that anything is possible. The price can break above the triangle or below the triangle. The internal waves of the ABCDE are free. So you may be wondering, Joel, what are you talking about? The A manual wave of the ABCDE is subdivided into 3. The B, the C, the D, and the E, all of them subdivided into 3. That's why we say free. All right, free number 3 signifying for Elliott wave traders. Okay, that is a corrective wave. All right. So when the ABCDE corrective wave is being formed, all right, at the end of the E wave, trader will expect, all right, a bullish breakout if the prior trend was bullish. That's in theory. But what I say to trader is that be ready for bullish breakout and also be ready for bearish breakout because we are dealing with a triangle. On the other hand, if we had before the prior trend was bearish and then we have ABCDE, traders, 1 second please. Thank you, traders. On the other hand, when we have a bearish move down, then we have ABCDE. At the end of the E wave, we'll be expecting a bearish breakdown. However, we can be ready for a bullish breakout, even if the prior trend was bearish, and also for the bearish breakdown. All right. So the structure 33333 is telling us that there is no. See here. So here, if you look at this chart, did you see it? So if you agree that there was a move up, looking like a trend, or looking like a trend, look what's happened here. The price went down. 1, 2, 3. Yes or no? All right. So for us Elliott wave traders, we'll be thinking, all right, probably. So that's how we go. We just take it gently. We say, all right, probably this is A. Or at that point in time, you may say, all right, maybe we're going to have, so when we were here, we will be thinking, all right, maybe we're going to have a flat correction. So you'll be saying, you understand now why we are saying that the Elliott wave count is 1 step at a time without assuming it. So when we were here, we say 1, 2, 3, all right, probably we're going to have a double retracement. All right, you see now? So then we see again, 1, 2, 3. That's a double retracement, yes or no? All right, so at this stage, something is going through our mind now. So we see 1, 2, 3. I see 1, 2, 3. Then we will say probably we'll have 1, 2, 3, 4, 5 forming a flat correction. Are you with me? So it's a gentle move down. Yeah, is it good? Something like that. So people will be saying, yes, it's a flat correlation. It's nothing to do with ABCDE. But the reason why I'm recording this video today is that you may understand practically when one is counting wave, what is going through your mind during that time. There will be all kind of thing going to your mind, and you will be taking into consideration what other trader may be thinking, or yourself, you'll be thinking, oh, maybe it's not a flat correlation, maybe a loose is going to form, all right, ABCDE corrective wave. So another, so this was going on. So after the trending first, you see the A, then you say this is B, all right. Now what is going to your mind at the point of B? Well, it's quite easy to trade it because 1, 2, 3 is minimum primary is 3. You draw a line there, you say prior to bullish signal above, and prior to bearish signal below. You're looking for trading bullish trading setup above, and you implement a top-down trading method to trade it. Sometimes the prime may not show a distinctive 1, 2, 3 like this. Sometimes you just go up to the top to the resistance level. It's a kind of a consolidation, but in a triangle, and you want to be aware of the midpoint target. All right, so there is. You see all this move here, there's a midpoint target somewhere there. All right, so what the price it was doing, in fact, that's what you want to concentrate on. You see here, it came back, that's where it is now. The financial instrument that we are analyzing is New Zealand dollar, Canadian dollar. So you see, this was a key level, very important key level here. Okay, so what the price is doing, apart from the ABCDE that we, Elliott wave trader, we know, is also consolidating between a level of 0.8367 and 0.9573. So somebody who does not know even about the ABCDE can still trade this if he or she saw that it is a consolidation. So now, the point I'm making to you about the ABCDE corrective wave price structure forecast is that you want to focus. So you are, say, you see 1, 2, 3, all right? And you see 1, 2, 3, all right? So what do you say? What kind of forecast do you make that point? So if you are thinking of ABCDE, you will be forecasting 1, 2, 3 down, yes or no? So another trader may say to me, John, this is not 1, 2, 3, 4, 5, as you are saying, as a flat correction. Another trader may argue with and say it's a flat correction. All right, we don't want to get into all kind of disagreement. The most important is that you make a right decision to buy and sell. All right. So when you are here, it is normal that you may forecast that the price may go down 1, 2, 3, 4, 5 if you are thinking of a flat correction, or you may forecast that the price goes down 1, 2, 3. So as an Elliott wave trader that is using the ABCDE, you are forecasting it as it's going along, the price going down. But what you don't want to do is to make a forecast and just think that definitely this is what the price will do. The price may do something else. It doesn't mean that it doesn't invalidate your forecast. Yes, it was correct for you at the point B to forecast that it may form 1, 2, 3, 4, 5. It was also correct that you may forecast that it may form 1, 2, 3, forming the C wave of the corrective wave. All right. So, as an Elliott wave trader using the Elliott wave pattern, especially the ABCDE, as it is being formed, it's not completed yet. So if it's already been formed, or you see the breakout above the triangle, or the bearish breakdown, it's already there. Well, you're not going to change anything. You just flow with the price, yes or no. But as it's being formed like this, all kind of things go into your mind, and you want to take into consideration all the scenario. So now at the point C, what can you focus here? You will be focusing that the price will do again 1, 2, 3. All right. It's normal to focus that, but does it mean that the price will do that? He may do that, he may not do it. Now, if he doesn't do it, does it mean that your forecast is wrong? No, your forecast is not wrong. You were taking into consideration what the price gave you at that point in time, and you are making a forecast because of the information that you had. But you have to add to your forecast when you are sending it out, when you are forecasting it, giving a small print and say the price may print something else out. Meaning that the price can, which means if you break below the 08367 and find a resistance, well, it can go down. All right? Or the price may form 1, 2, 3. It may not find a resistance there, but may continue to go up, which means price go down 1, 2, 3, 1, 2, 3, 1, 2, 3. Market say that's enough, and now a new trend may start here. What are you going? A new impulse wave may start here. So you may say, oh, probably this was a first wave of a higher degree. Now we have 1, 2, 3. Now a new impulse wave started here. Does it invalidate your forecast? No. The forecast is correct. With what you got, you will say, okay, it may form 1, 2, 3. If it breaks below final resistance, it may go down. It may start a new impulse wave here, which means instead of having 1, 2, 3 and stop at that resistance, the price may just go up and form a new trend. You say, oh, surprise, surprise, surprise. George, you said that ABCDE, blah, 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 and then you get upset. You don't want to do that, okay? So this is it. As it's being formed at this junction, all right? So the reason why you need to also take into consideration that the price may run away and form another impulse wave. There's another group of traders that are calling this are calling this 1, 2, 3, 4, 5, are calling it the C wave of the flat correction, and they are expecting, they calling all this a classic flat correction. They say, George, it's not ABCDE that is forming here. I'm sorry, George, but it's a flat correction, it's a classic flat correction, and this thing can run away from here. But if you are more, what do I say, composed or prudent or conservative, all right? All right? In your way trader, you will look at it from all the angles and you can be prepared for all the scenarios that are happening. But if, for instance, all right, you don't know what is happening or you get confused, which can happen sometimes, just pay attention to the market pattern. It's a consolidation. Full stop. Use a top-down trading method, take it to the median line. If you break a bull, retest and find a support, take it from there. And take it to the next level. If it breaks above it, well, what do? Just measure the width of that and project it up. Okay? And then remember the midpoint target also. As you are projecting it out, if it breaks above it and find a support, okay, you will be setting a target in that zone. If it breaks below it, so you are ready, you map it out. All right, you just map it out and draw a line there. And if it breaks below it, we do market geometry, and also you draw your trend line because other traders are doing exactly that, and you don't want to miss out, is it? You don't want to miss out at all. Why you don't want to miss out? Because you have an edge. As an Elliott trader, you can understand more the price action, and it is your right, or can we say that? It's your right to get something out of it at the end of the day. All right, so you see here, so now that I placed that, you see, let's call it that pitchfork tool on the chart, you see here, now that we place the pitchfork tool on the chart, look at that, everything become clear now. Do you start loving the pitchfork tool more? Are you using it more? You see, the price break below, you see, break below the pitchfork tool, retest it there, look at that. You understand now? And then come down. Sometimes the reason why you may see, instead of the price structure may not look like what you are expecting, it's just because of the reaction traders are doing. You know why this price did this? It pulled back here and retest there. It's because of the median line of the lower half of the pitchfork tool. Can you see that? So price come down a little bit below, they push it down, retest the median line, and they slow it down. So instead of the price just coming down 1, 2, 3, sometimes because of those action, technical traders say, oh, yeah, we wanted to retest it nicely. Oh, okay. Even you look at this one. You see between the green one and the blue one, if you put another median line there, okay, you see that? Something there. That's why this one was heading to. All right. You see. So those are the things you want to do. One step. So you do your forecast. You want to. So you if you put your pitchfork on your chart, well, here it is. It's a nice setup there. You see. Right. Now there is a trend line again here. Are you getting it now? So the reason why we are recording videos like this is that we want to show traders exactly what it comes down to when we are talking about Elliott theory. Anybody can go on Google today and learn the Elliott theory, and it's quite simple, very simple. Anybody can understand it. There's nothing difficult about the theory itself, except the complex way. But now, in order to make decisions or get something out of this messy market, as I like to put it to traders all the time, this is what you need to do. All right, this is what you need to do. This is what you need to work on more and more. See, even the median line of that orange channel is corresponding to where the price retested. So it's not only retesting. I'll change the color of my pitchfork tool into red so you can see clearly on my chart. You see now? You see now? All right. So now we have A, B, C, or is it a flat correction? So all these are going through your mind. It doesn't mean that you're going to ignore it, but you are aware of it, which is good. You are aware of it. Price can run away here, and you understand what can happen. So another trader may say, okay. So again, as I see like this, you see this is distinctive clearly. 1, 2, 3. Very clear. 1, 2, 3. Again. But this one is a bit messy, so that's why we are thinking of flat correction now, yes or no. But as I show you now, it looks to me personally, in my mind, I'm thinking more about ABCDE. So our expectation will be 1, 2, 3, up. Okay. But as I said, it's a forecast, okay? Price can print something else out. But then if he did exactly that 1, 2, 3, or you see, well, all you do, implement a top-down trading method, okay? Take it one step to the next resistance level, break below, and so on. And like I say, trade on the edge. And if your forecast is correct, you'll be making excellent decisions. So if you see again, you come here, you find a resistance, you receive a signal to sell, you sell. Come down here, you see again, sometimes the price may not do 1, 2, 3 clearly, as I told you. Sometimes it may just roll it down, sometimes it may just round it up. You say, well, it's 1, 2, 3, George. It's not there. We can't create it. It's not there. It's not there. There's nothing we're going to do about it, but it's sometimes can be hidden. Right then here. And then, so that will be your forecast, yes or no. So, one, so you see, A, B, C, D, E. That's what Elliott trader will be thinking. Or if you're thinking about flat correction, you say 1, 2, 3, 1, 2, 3, 1, 2, 3, 4, 5. So you're expecting another move up here. You'll be calling all this now a classic flat correction. So suppose the price did exactly what you were expecting, 1, 2, 3, forming the D, and then 1, 2, 3, forming the E. Here, what will you be expecting? You'll be saying that, all right, George, you are the man. The ABCDE is completed. Now I have to empty my bank account and buy this once and for all and retire very early because we're going to have a new trend. That one focus. Though you may see 1, 2, 3, 1, 2, 3 as it came here, the price can still break below that key level and then going down. So how do we avoid Elliott surprises? You remember that video? All right? It can still go down. Or Instead of starting a new trend here, you can still print out again 1, 2, 3. And then you may say, John, you say that ABCDE should be 5. Now it's doing 1, 2, 3 again. You say, oh, I'm getting confused. Don't get confused. Just remember that the oscillation or the consolidation that we see here can continue more, can be prolonged. Or we may see a different thing completely that no one ever talked about. All right. But you have done your job. That's what I'm saying. You're building a house, you call the electrician will do his job. You call the plumber will come and do his job. So your job as a ABCDE practitioner, focusing the market, you have done it. But your job is also to warn people, because if you've done something, you say, oh, guys, you shouldn't put the pipe here because, okay, somebody can get hurt. So if you build something, you've done so, you have to give warning. So you may say, the warning is that the price, if it come here, can still go down. If it come here, can still do 1, 2, 3 and continue to prolong. All right. If it come here, can start a trend. All right. All right. Or can do something else. Those are additional information. So as somebody calling himself or herself ABCDE analyst, all right, must give additional information to those who are using the data, so people are aware of it. And for yourself, if you are focusing the market, the ABCDE price structure forecast, what can you take into consideration? Like I'm telling you now, so if you have like now the D wave 1, 2, 3, look at this. Now it's retesting the edge of our orange trend line. Will you be surprised if the price start going down completely? So this is what we see. So now, if this 1, 2, 3 comes, so you say, oh, A, B, C, all right, D. You say, oh, now we're going to have the E, 1, 2, 3 down. Because you are saying that's the last lap, definitely it's going to be E. But the price can just go down big time. It continue to go down, or maybe bounce up a bit here. You think it's going to form a new trend or continue oscillation, but it's just it breaks below that orange trend line, finally break below it, and now you retest it. Or the price may not show a clear cut 1, 2, 3 up, but can just go straight to the orange line, retest it. Oops, where have I moved now? Okay. Retest it here, and then start going down from here. All right. So those are the things that can, sometimes you are using the ABCDE theory, you may say, oh, that's not what we were expecting. Oh, something has changed. Yes, the price is the key level. You understand. If it's just going down, you know, well, people are selling it now. Forget about, okay, the flat correction, forget about ABCDE. The music has changed. All right, you have to change the steps. All right, so this will conclude our discussion today about ABCDE Corrective wave, a price structure, a forecast. If this video has been truly useful to you, please let me know by giving us your beautiful thumbs up. If you dislike it, do not hesitate to mark it down. All right. However, if you think it's an essential tutorial that can help other ABCDE traders, feel free to share with your friend on Tumblr, Google+, Twitter, and also on Facebook. If you have not yet subscribed to our channel is 24 digit 24 Elliott waves in plural. Okay, subscribe today and be sure to click on the notification bell. So anytime we record a new video or anytime we're going to start a YouTube premiere video, you will be notified and you know what time the YouTube premiere video will start. YouTube premiere video is a powerful function that allows traders to watch a live streaming video. All right? If you are watching this video on YouTube, our Facebook page is stochastic-MACD Facebook page. All right? Like also our Facebook page. Sometimes I'll post video first on Facebook before posting them on YouTube. Sometimes I post them first on YouTube before posting them on Facebook. Previously, I was posting every video on YouTube first before posting them on Facebook. But now sometimes I post some video first on Facebook before posting them on YouTube. All right. So if you are also watching this video on Facebook, subscribe to our YouTube channel. All right. If you are watching on YouTube, like our Facebook page, and follow us and know where we are doing. Okay, so this will conclude our discussion today about ABCDE QiuY price structure forecast. Now, I want to answer a comment that a trader put below the first YouTube premiere video that we posted. According the best approach is that the person who recorded the premiere video can also watch it live and answer question live as in the chatting session. So there will be a chatting session. People will be chatting, asking questions, blah, 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 blah. And it will be nice for the producer, all right, to participate in those conversations, which is quite good, powerful stuff. I want to speak to traders, say, sometime I will be there to watch it, sometime I may not be there to watch it. So if you are posting your question, I say, oh, Joe, where are you? Oh, you didn't answer, don't worry, all right, you will be in the comment section, I'll answer it straight away. So don't expect me all the time to be there when the thing is streaming. I may be busy, I may be somewhere enjoying myself when this is streaming. So just know that sometimes George will be there, sometimes I'm not there, all right? So don't worry about it. Put the questions and then, all right, I will definitely answer it because it's educational material. That's why I spend more time when I'm recording the video to cover every angle of it. And that's why traders very often don't ask too much question, all right, after the video because I spend too much time going over it. Even sometimes traders think that, George, you repeat yourself too much. But sometimes the reason why I'm doing it is that everything is covered, especially those who are very, very new to the subject may also understand what is he talking about. All right? Until the next time, enjoy yourself and be very happy. We are the qkQiuY traders talking about ABCDE Corrective price structure and forecast. Happy trading to you all, and I will speak to you soon. Thank you for watching.